Good morning, everybody. Good afternoon to my friends in Europe. I hope you guys are doing well. Happy Thursday. Happy Thursday, Andrew. Now, today we're going to guide you through what happened yesterday. Is it real? And what we're looking to do today, along with kind of explaining why President Trump blinked. I'm going to lay it out exactly for you in a couple minutes. And then we're going to wrap up by talking about what we're doing right now, how we're trading it, and what you can do. But before we begin, I've got to address something. Last night, overnight, optionpit.com was hacked. Do not go to optionpit.com. We are fixing it right now. We have our top tech people on it, so should be back to normal. We're hoping within the hour. But we just wanted to let you know we are aware of the problem. It should not affect
doesn't affect credit cards and stuff. Just don't forget.
Yes. For your one, they didn't get any payment systems or anything like that. Don't worry. All those are on a completely different platform, completely protected, completely separated. And two, if you're using our VIP site, also not affected. So paid members, you can still go to the 0DTE room or the trading desk room or weekly profit cycles or Delta Strike. The only issue is specifically with optionpit.com. And again, we're burning the morning oil to try and fix this today. All right. So was yesterday real? That is the question I think everybody wants to know. Because we were up, over 9.5% in the S&P, 12% in the triple Q, 7.5% in the Dow. Now, this morning, the triple Q is down 3.5%. The Dow is down, or the S&P is down about a little under 3%, and the Dow is down 2.3%. So we're giving a little bit back today. So again, was it real? Before we can dig into whether it was real or not, we have to understand what happened and why. And the short answer as to what happened has to do with the U.S. Treasury market and a hedge fund headquartered in Japan. So one of the major trades that firms do when they've got extra cash is sometimes called the Fed carry trade. And in this Fed carry trade, I buy bonds, put them up as collateral, and then I sell Treasury futures against it. And Treasury futures are liquid. They trade at a slight premium to the rate on a standard bond if I buy it in cash. So what traders do is, again, buy that bond, sell the future, and then collect the carry. It works great unless that spread starts to widen. So if bonds weaken and futures go up, or the spread between bonds and futures widens out, it can create a serious margining problem. We saw that happen Tuesday night into Wednesday morning, where the 10-year bond yield went from below 4.3 to over 4.5. That is a crazy move in the Treasury market, guys. I know 0.2% doesn't sound like a lot, but in the Treasury markets, that is massive. So President Trump is not, is a lot of things, but you're not going to be successful in the real estate market for 40 years or 50 years and not have a very, very keen understanding of the relationship between the Treasury market and the overall economy. What I'm told is that President Trump was informed of the overnight freakout and what happened with that fund did the math, and realized that the path we were going for was a complete mechanics breakdown of the bond market, and he pivoted. Was okay with the recession, not okay with a depression like we saw in 08. I know nobody likes to call it the Great Recession a depression, but when you look at the metrics, it was a depression. So with that on his face and realizing that he would take the lone blame for that, he pivoted. Now, this morning, we're down a little bit. We can share my screen. We're down a little bit. And, you know, like I said, down 2.9%. But we had that crazy move yesterday. So is it real? And the answer is, yeah. Yeah, it is. But is it real we're going back to 6,200? No. No, it is not. But what I will say is the panic that people were feeling, the kind of raw emotion that traders were trading on Thursday, Friday, Monday, and Tuesday, and frankly, first half of Wednesday, that has taken a serious turn the other way. Now, VIX is still high. We are still primed for big moves. But are we done with peak panic? And my answer is yes. And today's selling, probably confusing to a lot of people, a little scary, because we had that big up day. Everyone was feeling great. Now we're down a little bit. But this is probably, you know, the market basically told us with that move yesterday, with the strengthening in the bond market that we are seeing today, that short term, the mechanical pieces that were causing a VIX to get to 60 are now off the table. Are we still going to have a lot of chop? Yes. But is this the beginnings of, you know, are we going to go back and re-threaten 5,000? Maybe. But do I think we're primed for a dip to 4,000 anymore? No. And do I like the market higher from here than lower into the end of at least for the next quarter? Yes. All right. Now, what indicators am I watching to continue to want to be long? Andrew and I are going to answer that question. So Andrew, one of the indicators he watches extremely closely is the relationship of the 9-day VIX, which is the VIX looking at expirations with 9 days to expiration, versus the VIX that you're aware of, the 30-day VIX. And it's an important time to be talking about these VIX gauges because yesterday, Wednesday, April 9th, 2025, was a historical day in that the VIX had its single largest drop ever. From high to low, it was down over 20 points. Now, normally I don't like describing VIX moves in percentage moves, but when it's really, really, really high, I'm okay with that a little bit because it gives us some context. Yesterday, the 9th, we dropped 36.4%. That is 7 percentage points more than the last reversal, which was on May 10th and was 29.6%. So that was a stunning, I mean stunning drop in fear and strong rally. So Andrew, that relationship between the VIX and the VIX 9-day, I'd love if you kind of walked everybody through, in like 3 minutes, how you use it and what you're looking at. If you want to share Andrew's screen, assuming he has it shared.
I think I have shared. Hello, everybody. So 9-day VIX is just the VIX calculation on options expiring in 9 days in the S&P 500. Think of 9-day VIX as the at-the-money volatility for the S&P 500 on an imaginary 9-day hold. So the actual 9-day VIX really doesn't exist. It is a confab of option prices, Mark, implied volatility for options that are 9 days out. So in general, what you get is, and this is, I'll do a little art here. Let's do something new. So right now, if you draw a curve, it looks like this. Okay. The 9-day VIX is up here, trading 44.89 right now. Where it go? There she blows. Right, and then VIX Ordinary, which is 30 days out, is 37.73. Okay, so I'll just tell you this. I don't start to buy volatility puts or really want to get short like buying VXX puts and stuff like that until this number starts to get close to this number. So this is 9-day VIX and this is VIX. So this is a 30-day number. What that means is you want to see the market start to discount short-term options. So if you think of it like this, Mark's in the pit and he's trading, right? Mark's in the pit trading. He's buying them, he's selling them. For him to buy short-term options and pay a 45 volatility, you're buying options like that are decaying like absolute wildfire. So the market has to be moving, that the traders have to feel, okay? And they're very keyed in. It's called realized volatility. They're very keyed into how much the market is moving every day. Mark talks about average true range. How much is the market actually moving every day? As long as they're willing to pay more money for 9-day VIX, they expect the market to do crazy things or move more than VIX is showing in the short term. It's the best signal you can get as a retail trader. Mark and I used to know these signals because we used to look at the volatilities going into expiration. We didn't have, back then, all we had was monthlies, right? So our monthly volatility, but we did have, we had options that expired in 3 weeks and options expired in 2 weeks and options expired in 1 week. And we only had daily options 1 day a month, which is hard to believe. Mm-hmm. But it's true. So we had these things. We only had them, just as the cycle was ending.
Yes.
So now I would say is, do you want to start acquiring volatility puts? And I would say do that at your peril currently. Yeah.
We're still not in a spot where I'm ready to go short volatility. We want to see that curve flatten. So what Andrew's looking for when he looks at that point is that he wants that black line to actually look like a line instead of a curve, or actually even better yet, he wants that curve to actually lower. In normal circumstances, the front end actually is lower than the back end. And so when you think about that 44.84, that 37.73, think of those as as option prices. It's easier, typically, it's easier for us to see what's going to happen tomorrow and Friday and Monday than it is to see what's going to happen a month out. Right now, with the market moving this much, the market's basically saying we have no idea what's going to happen tomorrow. And that is why you get this inflated front end. So now what do you do in this market? Right? I just told you, I think the peak fear is over. I think Andrew agrees with me. We pride ourselves on having differing views here and discussing and coming to consensus. So obviously, if Andrew disagrees, we want to share that take. But my feeling is we did hit peak volatility, peak fear, peak option prices when the VIX hit 60 on Monday. And we may have kind of turned a corner on how expensive options are going to be going forward. They're still going to be high. 38 is a extremely high number for VIX.
Right.
But they appear to have come off, and that puts us in an advantage. So the big issue, Andrew, people have, it's very hard to just stick a leg out and buy, right?
Yep.
I'm looking at the S&P, and it's trading 5,300. Part of me has FOMO. Like, hey, this thing is going to turn around. I better get on board. But what's the other part of me saying? Hey, did you see Tuesday night when the bond market broke? Hey, did you see how the president can move things? And folks, the president is the number one indicator for the market right now.
True.
Yesterday morning, Wednesday morning on the 9th, he tweets, "Today is a great day to buy stocks." Then, an hour and a half later, he rescinds the tariffs.
Yep.
Gee, I mean, I wish Pelosi was that obvious.
Well, she doesn't. She does the opposite. She just takes she's in committee. She hears something good, and then she goes and buys the stock, and then she announces it later when she does her filing.
I know. I'm just saying, if you're watching any indicator, I don't care what political view is. So like on X, I always track the president, whether I agree or disagree with their policies, because they can move markets.
I mean, they did in his first term. They're going to do it in his second,
Yeah, this is moving markets to the nth degree. I can't recall a president ever swinging the market 12% in a day.
So if you want a good indicator for the day, right?
Mm-hmm.
It's like you kind of keep your eye glued to this little bad boy here. So during class here, we were trading 44.84, 9-day volatility starting to melt a little bit. You see the gains today erased. We could make a run back to where we were yesterday. I mean, right now it looks kind of awful, right? I would say stocks aren't, but it's a good indicator to keep on your.
So you've got this indicator, and then you've got following President Trump on X. Those are basically your two really good guides to the stock market. Now, circling back though, we don't know when this indicator is going to completely flatten up.
That is
correct. It could flatten up, and I kid you not, 400 points lower or 400 points higher. We could see volatility subside and then drop, and we still see the market drop. The more likely scenario is volatility subsides and we move back. But again, I've got FOMO because I'm afraid to miss out on another day like yesterday. But I also have the fear returning, or FOFR. And I'm worried about the market just completely rolling over. President Trump says, I'm mad at Liechtenstein, and I'm jacking tariffs across all the EU. It's still on the table. The good news is we have an answer. And that answer is two-way trades. So Andrew, what is a two-way trade, and what are you doing? And we're going to, folks, in a little, following this, I'm going to share a presentation that I want you to watch on two-way trades, but you're going to be very excited about this, because Andrew is going to show you straight up, as we did earlier in the week, what he is doing. Andrew, I would assume that your trade from earlier in the week that we shared on Tuesday,
Did very
worked
well.
out pretty swimmingly.
Yep, about $200 per spread. So it was like 50%ish.
So you put you put what? So you made 50% in a crazy market that moved both up and down since you presented on Tuesday.
Right. And then this is the idea of a trade we did. We tried to do yesterday. Some people in two-way trade, and we got, we're able to put it on. I couldn't put it out via alert because we gapped 10%.
In about 5 minutes.
It was, in about 5 minutes. So you can't really put a trade out to an alert to students. This is currently trading for about $5 right now. So I bought an upside call spread in SPY, and I bought an in the money call spread in VIX. So you have the two ways. If the market continues like this call spread will pay us. And in this market, surprisingly, VIX call spreads over 20 have actually made pretty decent money.
They have.
But when you have your rip, then you sell your SPY call spread. So the idea is, is the volatility going to stay here? Maybe. I don't know. But if the volatility starts to subside, then all of a sudden we start rallying again. So you have two trades are essentially they're opposites of each other. So you want to ride the opposite trade, one takes over, you close the trade for a win, and that gives you a little confidence to put on trades when the market's going insane. I was asking people in class, anybody want to put on a call spread in SPY with the market up 7%? And they're like, no, nobody wanted to. But I did it anyway in class because I know I was buying a call spread and then I was buying a VIX call spread. So it gives you some confidence to be long at the top.
So yeah, folks, the relationship, and I'm going to switch my chart to dailies to make things easier for you guys.
And it's markets, just FYI, it's 10:27.
Yes, we will wrap things up in about 5 minutes, Andrew.
Okay.
So I want to share with you. So just switching to my screen here, I want to share with you what we're looking at. So this is all of 25. And this is all of 2025. And I'm going to switch these both to a line because I want you to see this. So the top is the S&P 500. The bottom is the volatility index. And what relationship do you notice? S&P drops, volatility index goes up. S&P tanks, volatility index explodes. So what Andrew is explaining to you guys is what I can do is buy this index, the VIX, and I can buy SPY. Pull up SPY. And I can buy SPY and make money. Because if the market moves 2%, I will make enough money on SPY to clean up. And if the market falls apart again, my VIX spread is going to make me so much money that I'll cash out and then I'll own my SPY call spread if and when we rip, which is exactly what happened on the 9th. I did not have a 12% bottom to top rally on my bingo card, but if I was in a two-way trade, I was doing backflips.
Basically, yes, that is it. I don't know if I could do a backflip anymore. I used to be able to do a backflip when I was in college.
Oh, yeah?
Yeah.
I've never been able to do a backflip. But what I will tell you is that two-way trades are the trade for right now. And what you're about to watch is a video where Andrew and myself walk through exactly what two-way trades are and how he executes them and how you can join. And if you'd like to join Andrew in his two-way trades, there's one you can jump on right now. You can click the link here and join us. But for right now, I want you to enjoy this presentation, and Andrew and I will talk to you soon. So for Andrew Giovinazzi, I'm Mark Sebastian. I am your only option. Stay tuned for two-way trades.
There's an unnoticed pattern that happens in the market nearly every month, 96% of the time, and recognizing it created the biggest breakthrough of my 30-year trading career. It's like clockwork, 105 out of the last 110 months. Most people don't look for patterns like this, or if they do, they don't know what to do with them. But I'm a professional trader, always looking for an edge. So when I see a pattern like this, I know right away I have that edge. You see, a reliable, recurring pattern like this can be exploited. And that's why we look for patterns. Any pattern this reliable can be used to gain an edge. And this particular pattern allows me to place a two-way trade each week where I don't care about market direction or the timing of my trade. The pattern isn't about going up or down. It's not about Fed meetings or earnings. It has nothing to do with AI or crypto. It's so concrete and predictable that the pattern represents stocks in 99% of all American portfolios. It's about a move, a percentage. It's about action in the market. That's all a good trader needs to find an edge. Today, I'm going to dive deep into that move and show you exactly how it works. You see, stocks can explode higher or crash lower, and I still make money. Movement is the key, and it doesn't have to be crazy moves either. The pattern executes 96% of the time. So don't think of that the move we're talking about has to do with a crash or a bull run. It doesn't. It's so bread and butter that it goes unnoticed to the normal trader or investor. But for pros, it's all we need to get that edge. It's so powerful in my hands that I'm here today to unveil it for you. My name's Andrew Giovinazzi, and I've taught thousands of traders, the same traders you see in the background of the CNBC or on the floors of the NYSE or CBOE. I've taught them live in the pits of Chicago, the floor of the P-Coast in San Francisco, and from my perch in Maine at Option Pit for the last 10 years. I know, it's hard to believe I've been teaching students how to trade for that long. I'm so young and good looking. Now I'm the proud head trainer at our boutique firm, Option Pit. And I want to tell you exactly how we found this pattern and the success we've had trading it. It's created a revolution, and hundreds of people are already taking advantage with two-way trades. So I'm here today with Mark Sebastian, the CEO and founder of Option Pit.
Hey, Andrew, I'm really excited about what we're going to talk about today.
Yeah, me too. All right. So Mark and I are both professional traders, and we used to work together on the floor of the CBOE. That's the Chicago Board Options Exchange. Before we left to form Option Pit, a boutique trading education firm that trains everyday people like yourself how to maximize their portfolios.
And when we say everyday people, we don't mean it as a dig. We're talking about everyone who isn't a professional trader, which is 99.9% of you. Because without traditional training and over 30 years of options expertise, you never could have spotted this pattern or known how to construct a trade that pays you.
Mark and I are here today because there's always an opportunity to make money in the market. But as pro traders, when we see a pattern that happens over 96% of the time, we create a profit plan, and we have. And that's what we're here to show you. Over the last year, we've been testing and testing and testing to find the perfect trade to pay us on this predictable pattern, and we've actually doubled our results.
You know, it's funny, Andrew. A lot of people think the market is random, and they're not wrong. The vast majority is random. But as you discovered, this pattern has occurred 105 out of the last 110 months. Think about that for a second. That's a wildly reliable pattern. And as we always say, anytime we see a predictable pattern, we can trade it and we can make it pay. And you were just telling me, Andrew, trading this pattern actually gets better and better as you trade it.
And that's one of the best parts. You see, when I first noticed this pattern and launched this strategy a few years ago, I was averaging an 8% win rate every 14 days. I wanted a consistent, repeatable, hassle-free trade that would generate weekly income. And I was happy with that 8% every 2 weeks.
That beats financial advisors. That beats most hedge funds. That's a solid weekly income strategy and one where you keep 100% of the profit. You're not paying someone a slice of the profits.
And fast forward to now, we're hitting a 20% return every 14 days on average. That's over 2 times our original returns. And that's not a hypothetical number. It's not cherry picked or from a back test. 20% every 14 days across all real issued trade alerts. This number includes both our winners and losers. Here's our full track record, and we'll dive into this more later. One of the things you'll learn about us here at Option Pit is that we are fully transparent. We do not shy away from showing you our results. And we're actually trading these ideas alongside you. Today, Mark and I are going to show you how we win with two-way trades in up markets or down, how I pinpointed this holy grail predictable pattern, and how to target 20% every 14 days on average.
Plus, and I am super excited about this part, how we set up for rare 400 to 500% wins, or even more, while everyone else in the market is getting destroyed. Hedges in the market as insurance are critical to not only every trader, but every investor as well. Why just ride the train when you can drive it? This strategy has perfected an essential hedge. We call it a portfolio saver.
That's correct, Mark. And boy, it really could do just that. In the next 12 months, between weekly two-way trades and our portfolio saver hedge, I expect we will maintain a 70% win rate. And with 150,000 I have currently in play on this strategy, I'm looking to make 60,000 or more. I created this two-way trade strategy because the pattern was too reliable not to. But I also wanted to give traders like you a chance to make more money hassle-free. With this strategy, what we make, we keep 100%.
You don't have to have 6 figures to make these trades either. The average cost per trade is a little over $600, and we never have more than 4 trades on at one time. So the minimum you would need to trade all positions is only around $2,400. In 1 minute, we're going to take a look at our results. We've been talking about 20% every 14 days, and we're going to show you what that actually looked like depending on your position sizing.
Yeah, and when I built this, I knew I wanted a scalable strategy that was going to help the most people. Start off and learn as a one-lot trader and see how it works, or start off with a class and a paper trade if you want. Our goal here is for you to make the first trade with pure confidence. We hear our traders say, wow, I'm starting to get the hang of this. We design our trading for everyone. Remember, I was a trader and trainer for over 20 years, and that's why we've made this as simple as possible. So, if you're trading one contract, you've risked $2,480. You made $1,791. But 5 contracts, $8,955, 10 contracts, $17,900, and 20 contracts, $35,820. Now, I know when you see results like this, the sirens are going off, a 96% recurring pattern, 70% win rate. It all sounds too good to be true. It's easy to say there's just no way. Or even if you're doing this, there's no way I could. Or maybe even, oh, well, you're just out there selling options all the time and scalping trades or some other system that's just not for me. Let me tell you, this is not an option selling program. That works great until it doesn't. Because in a single trade, it could put all your gains at risk. Only rookies would be in the option selling game long term. Part of this program and having access to the expertise of pro traders like Mark and me is learning how to manage a book of trades. I've taught thousands of paying students since 1993. Even this guy, when I was back running programs for floor traders. I built my whole career on risk management. And let me tell you, the less you lose, the easier it is to make money.
All right, Andrew, I'm going to ask the question that I think everybody is thinking. Why aren't more people doing this?
It's funny you asked that, Mark. Because believe it or not, I actually stumbled upon this pattern from trial and error. You see, when you're sitting on a floor trading millions of contracts a year, you learn the hard way. And once you have an understanding of what works, you can build trade programs that harness the market's energy and pay you. For example, the first person to discover a lump of coal probably had no idea what it was or that it was even valuable. But over time, and monetizing that commodity, they learned the true value of what they've discovered. So what may look like coal to you, to me is a diamond mine. It all started with a simple question. how much does the S&P 500 have to move for me to make money buying options? And I didn't know what the answer was, but I wanted to. And thank goodness I asked, because what I found became our predictable pattern and the source of our two-way trade. I found I only needed the S&P 500 to move 2% every month to make money trading options. I want to repeat that. And when we talked about that simple trading pattern at 96%, this is it. I was blown away by that, to be quite honest. And I would have thought it needed to be much higher. The fact that that move was that small scared me. I thought, wow, I won't be able to make a lot of money from that. And I bet it doesn't happen that often anyway. Boy, was I wrong.
Andrew, you know how much I like it when you're wrong. And boy, were you wrong. And we've been raking it in since then. Let me put that into perspective. To make money in a single month, the S&P 500 needs to move 2%. It's around 100 points. Could be up, could be down, doesn't matter. As long as it moves. That's the movement you were talking about earlier. We make money.
And out of the last 110 months, the S&P has moved at least that 2% minimum we need 105 times. That's only 5 months in the last 9 years this hasn't happened. And once we have a certainty, and really this is about as close as you can get to a market certainty, then I ask myself, okay, what's the best trade I can put on to pay me on this 2% monthly move? And I created the two-way trades.
Yeah, let's dive in on these two-way trades. Why don't you tell me about what you do and how you created them?
So first off, two-way trades are a combination of VIX and SPY. We'll call them two trading opposites. And it's very easy from this chart to see that. But really, the fastest way for you to understand a two-way trade is to go through some examples. And let me show you a few we actually traded. So let's take a look. So the first example is we enter on October 25th. We spend $521 on the SPY and $175 on the VIX. Now, also, all we need is our 2% move during that time, okay? And we're pretty sure, 96% sure, that that's going to happen. So we got our SPY move. We have our opposite move in the VIX. We close both sides of the trade, and we get a 17% profit in 5 days. Okay, so example 2. On September 27th, we spent $325 on the SPY and $420 on the VIX for a total of $745. Again, note that we have a 2% move, which we expect about 96% of the time. We get to close our SPY, then we close our VIX, which is the opposite trade, for a 19% profit in 2 days. We are in, we are out, and we're done. Here's another example. We're running the trade from January 24th to February 7th. We bought SPY put verticals and VIX puts and one call vertical in SPY. The total we paid for the trade was $465, and we were out of the trade with a 16% profit in 15 days. Now, how do we do that? The first thing is the chart of the VIX where we wanted to capture money on our puts. So we entered the trade right here around the 24th. We had a run up in price, and then VIX collapsed into the end of the trade where we closed the puts. So that's, again, closing one part of the trade, leaving the other part of the trade open. The second part, running when we owned SPY calls. So we had an upside where we got to sell the calls relatively early in the trade. And then on the downside, we had a quick, sharp move in SPY, and we were able to get out of our SPY put spreads. So the way the trade worked was we were able to hold the VIX puts for a longer period of time, and we closed the SPY in a very short period of time.
Andrew, this is about as reliable as a geyser in Yellowstone. Another key piece to that reliability, though, is how you close the trades. Can you walk us through your closing rules?
Yeah. So here are some of our rules for closing these trades. When we put the trades on, we put both sides at once, and we do that immediately. So one side is winning. I'm not trying to pick a bottom, and I'm not trying to pick a top. And I don't care about the specific moment that I put the trade on. I always put them on at the same time. That's key. Number 2, I don't even look at the trades until one side is up at least 50% from where I put it on. Number 3, I ride that 50% till I hit an 80% gain. That's my target. And when I set that, I look to take it off. Number 4, anytime I have a momentum change. So once that one side is off and I have a change in momentum, that's when we really clean up and make some money.
So you're making enough money to pay for the one side of the trade with the other. And if momentum shifts and the other side wins as well, that's what takes these two-way trades from consistent 20% every 14 days and makes them home runs, correct?
That's correct, Mark. And let's look at another example. So, again, knowing what we know now, on August 30th, I spent $285 on the SPY and I spent $360 on the VIX for a total of $645. Again, we had a much bigger move in SPY this time. We get our 2%, which we expect around 96% of the time in a month. I take profits on my SPY. I take profits on my VIX, which is the opposite trade. We close for $795 or a 23% profit in 7 days. Okay, now here's another example. So remember, we're putting trades on. We don't necessarily have to be right on direction. We just need to let the market move one way or the other. So this was a one-day trade. It happened very, very fast, from February 12th to February 13th. Now what happened here was we got a very, very, very sharp spike in VIX, where we were able to take off that position very, very fast. On the SPY portion of the trade, because we had the very quick drop from the 12th, we got to sell our puts very fast. And then by the end of the next day, we were able to sell our SPY calls out. So we had a very quick turnaround in SPY in 1 day because the market literally had a 2% move in 1 day instead of 30 days. And then we just exited our VIX put at our leisure. Now here's one more example from February 12th to February 15th. So we enter the trade on February 12th. Again, we're moving up very sharply in VIX. Doesn't matter, even though we own a VIX put, it doesn't matter to us. We don't have to close our VIX put. What it did give us the opportunity, though, to do is, because the move was so sharp up and down, we were able to run our SPY calls for 3 days. We had a sharp 2.5% move up, and I was able to sell my SPY calls easily and then go back and hold my VIX puts for a nice close after VIX collapsed from this very sharp peak. So once again, we don't have to be worried about direction. We're just really looking for the trade to close that's paying as fast as possible. Now here's one more example on about a 5-day hold. So from March 6th to March 11th, I have a VIX call and a SPY call spread. Now you can see we have basically a straight up march for VIX. And I ended up selling the call somewhat near the peak. On the flip side, I was able to exit my SPY call spread early because VIX and SPY were actually running together in this particular case. SPY going up 3 days of straight run up. I was able to sell my SPY call out, and I was able to sell my VIX call out and make a 30% profit in 5 days. In this case, I made better returns because I was able to close both my SPY call spread profitably and my VIX call profitably. And those are my examples of how to trade weekly profit cycles. Now, I'm going to do something here that people don't normally do. I'm going to talk about a trade that didn't work. Now, in the last year, out of 30 trades, we've had 26 winners and 4 losers, and our biggest loss was 35%. Now, on this trade, we made a critical mistake. We didn't close a win, and when the market reversed, our gain quickly evaporated. And what I learned from this was that we need to take our profits sooner. I got a little greedy on this one, but as I was saying earlier, this strategy is always evolving, and I'm always learning. I'm always making adjustments. I'm always optimizing two-way trades, making them stronger and easier. Adjustments like this are what catapulted our results from 8% every 2 weeks to 20%.
We've mentioned this a few times, but I know we're going to get questions about the portfolio saver, the massive hedge that's literally built into the strategy. Talk to us about how that portfolio saver works.
Okay, as we know, people are always waiting for the other shoe to drop. And as a matter of fact, according to most market research, There's a bear market fear in all of us, myself included.
Yeah, me too.
So when the market becomes hot, I'm always waiting for the downside. So I built in downside insurance with the Portfolio Saver. Here's how it works. As long as you have a two-way trade on, if the market falls through the floor, you're going to get a serious windfall. This won't impact our two-way trade targets, but like all smart men, I want insurance, and this is it.
Let me step in real quick and talk about one of the most exciting aspects of two-way trades that I use myself, the Portfolio Saver. You automatically get this insurance. It's literally built into the two-way trade, meaning that if the market has a huge move to the upside or the downside, that's great for two-way trades. We're going to see way more than our 20% target. Right now, you have what? $150,000 in the strategy. Say the market was limit down. That means the market drops 5%. When the market drops 5%, they actually stop trading for a half an hour. So if that happened, they pause trading. Everybody's terrified. How would the two-way trade perform?
So instead of 20%, I could make 3 to 4 times my money on the trades I have open. So I'm doing the happy dance, I guess.
Yes, and everybody wants to see you do your happy dance. Let's face it. So to sum it up, there's a market pattern that happens nearly every month, 96% of the time. We've shown you how to harness the VIX and SPY to build two-way trades. We showed you our track record, and we showed you the invaluable insurance of the Portfolio Saver, which in a single trade can return 3 to 4 times your money. How can everyone here learn to do this?
I've developed two-way trades into a trading program that you can join today. It's called Weekly Profit Cycles. Weekly Profit Cycles is where we take advantage of the 2% monthly move. It's where I'm alerting these SPY and VIX trades, and it's where you can actually put on the positions with me. Let's walk through everything you get when you join Weekly Profit Cycles today. First, you get the Trade Strategy Dossier, which explains all of the trade varieties that we have and the conditions that make Weekly Profit Cycles work. And counting down to the next live session on Wednesday, every Wednesday at the same time, we have a trade. If for any reason we are not going to put a trade on Wednesday, we will put out a RIF trade that's off cycle for that week. Now, next you get 2 live trading sessions per week. You get a session on trading and a session on education that are about 45 minutes long each. There are people using this strategy and live trading with me on Wednesdays who had never used two-way trades before this, who are now entering these trades each week on their own. These two-way trade masters will also be at the Wednesday sessions.
Yeah, and I want to talk about that. You literally did take a bunch of people and show them how to use two-way trades. I want to talk about my friend Cleet. Cleet's a member of Weekly Profit Cycles. He dropped every other trading strategy that he was running and is now primarily using Weekly Profit Cycles. In the last year, he told me he's made almost $60,000 trading the Weekly Profit Cycles strategy, two-way trades.
It's pretty fantastic.
It is.
When you join, you get two-way income trade alerts, either email, notification from our app, or on the website, all in real time. Next, you get our 1-hour getting started class, so you can hit the ground running, getting ready to trade your first Weekly Profit Cycles trade, your very first session. And lastly, you're going to learn to create your own small hedge fund using the Weekly Profit Cycle system. And this is what I'm most excited about, giving people the opportunity to learn how to trade the market in any condition. We truly built this to be as simple and hands-off as humanly possible.
So, when's the next trade?
Wednesday. This coming Wednesday, we'll have our next Weekly Profit Cycle trade. And as we said, we'll put it on together in class. The goal, as always, is 20% in 14 days, or even better, of course. I want you to join me before our next alert. And today I'm offering you a special prize for new members of Weekly Profit Cycles. In fact, I want to make it as easy as possible for you to join me. OptionPit stands behind all of its products, and it's our policy to offer a 14-day money-back guarantee. If you aren't satisfied with the service, we will refund your money, no questions asked. That way you can attend 2 live sessions and put on 2 trades and really see the value of this strategy for you for 14 days. Click the offer on your screen right now and make sure you get in. And when you join, I'm immediately going to send the trade strategy dossier and a few other bonuses you'll see on that order page. So make sure you click right now and check them out. We'll get you ready to trade and up to speed before our first live session. And make sure you're fully equipped and confident to place your first trade with us. I can't wait to have you as a new member of Weekly Profit Cycles. And Mark, thanks for joining me here today.
You bet, Andrew. It's been a pleasure as always. I am so excited to see what's next for Weekly Profit Cycles and to welcome all of today's new members.
Make sure you click that link. And thanks for joining us. I'm Andrew Giovinazzi, and I'll see all of you in your first live session on Wednesday.